There are all kinds of reasons that I could give, but I don't think I'm the expert, and I know better than all the people that you usually have on. I work with these cycles and I work with price levels, and I say markets don't move at random, so you can exactly know when there's a top and when there is a level that is reached. I just want to give a general idea. For the last maybe 200 years, the market goes up like 8–9% a year. Everybody seems to know that. The funny thing is, when it was 2000 and we had a huge gain, people said it's going to go up for 8–9%, and even now I hear the market's going up for 8–9%. What I forget to mention to you is that if you look at the average of 7–8% to about 40–45% above the average. So in order to get back to the 7–8% average a year, you have to go down 40%. And I always wonder why people say the market goes up 7–8% a year. They say that even it's not relevant from how much we're up already. Mm-hmm. So looking at that in history, then we have much lower to go. That's only one reason. Mm-hmm. The second thing is that in 2013, my cycles are turning down, and they're down into the end of 2017. The level of 5,000 came up because the New York Times once wrote an article about Prechter, and he said the market goes to 1,000, and then they called me up and says, what do you think? So I calculated, says I don't come to 1,000, I come to 5,000.
Well, how do you calculate 5,000? You said you calculated and you got to 5,000. How'd you do that?
Well, let me try to explain a little bit. If you have a ball and you throw it up and it gets to the ground, and then it goes up again, but not as high as it was, and it goes lower again until it gets down to the ground. So if you take a big move down from 2000, and then you get back up to 2007, and you go down to 2009, you get up to 2013, it's like a ball that gets up and down, and then you can calculate if it comes down again how low it will go.
So if these predictions come true, you're basically forecasting an incredibly poor economic environment. I mean, that would rival what we saw back in 2008.
Yes, well, I think the second half of the year will be reasonably good, maybe GDP of 2%. And then the cycle tops again. What I mean is cycle tops again. You have economic expansion that takes a couple of years, 3–4 years, and then that's over. And the problem is that this time we started from very low, so we didn't get very far. So we start going down from a reasonable average level, not from a high GDP level, so which means is we have to go down.
Charles, sometimes when we talk big picture, it's tough to understand cycles. So I tell you what, let's drill down and make it easy with a stock everybody knows, Apple. When you look at Apple, what do you see? Talk us through that from a cycle analysis point of view.
Well, what you see here on top, you see the Apple price. On the bottom, you see my cycle, and we had a price target of 707, 708, and we went short at 707, 708. We covered around 500 the shorts. But as you see on the bottom, the cycle is still down. So all these blips that you see and people trying to look for the low didn't work. Why? Because the cycle is still down. So you cannot change the cycle. Mm-hmm. So only when the cycle bottoms will it start going up a little bit.
Where do you see where do you see Apple bottoming out?
Well, we said it can still go to 360. That was the original target. We didn't stay short all the time because the first target was in the 500 level, and it was nice, you know, to cover at 500. Mm-hmm. And we told people don't go long, don't go bottom fishing. The cycle is still down, and we can go as low as 360.
And what about, say, Intel, another name we all know and not necessarily love, but what do you see cycle-wise when you look at Intel?
Well, if you look at my Intel cycle, I don't know if you can show it, you see that the cycle topped right together with a high in Intel, and then there was a low, and it's bouncing a little bit, and maybe has 1 or 2 more weeks, as you see, approaching the next cycle top. So don't expect much from Intel. This is just a bounce caused by the cycle bottoming, and soon we have a cycle top again, and we will see lower prices.
But it sounds like it's not just Intel, it's semis in general that you're worried about.
Yes, yes. We had a price target of 1505 on the S&P, and we sold everything a couple of weeks ago when we hit 1505. Mm-hmm. And risk is simply too high.
But in terms of the
stocks? The stocks, as you see here, is still on a buy signal, but here also, if you look on the bottom, you see that in a couple of weeks, it's approaching a cycle top. So the risk also in the stocks will be very high in a couple of weeks. So it's a risky market.
A risky market, and before we let you go, just to hammer the point home, Charles, can you just give us one or two bullet points in plain English how you define your cycle analysis?
It's not so complicated. If you take a chart of, let's say, 50 years, and you can do it even by hand, and you look at the high, and you look at the next high, and the third high, and you count the days or the weeks from high to high, you'll be surprised that you find a pattern. So let's say every 55 or every 57 days there's another high. Of course, it coincides with the papers are going to write a reason why it came down, but that's not the point. The point is the distance between the highs and the lows is exact. So once you find every 4 or 5 times an equal amount of days or weeks between the highs, you found a cycle, and then you assume the cycle can be projected in the future. And as long as it continues, you just found a cycle that's workable. And then when you approach the next 57 days, you just say risk is rising, and 9 out of 10 times you have a market top.
Charles, really quick before we go, when do we actually get to 5,000?
The cycles are down into 2017-18, and then I expect a huge bull market to start again.